Afternoon to everyone. Good morning also to the US, and welcome here to our next CfC PwC Intersessional, this time in collaboration with Cointelegraph. And of course, I really welcome here Caitlin Long. I'm calling in from the US. So hey, Caitlin, welcome here with us with Fred again. Fred is again with us from PwC, and I'm really looking forward to our conversation today. So we are talking about blockchain banking. Is that really a thing? And both of you are experts in that, so will be an interesting discussion. So I would just start with the first question. And of course, as the other times, our participants or the viewers have also the possibility to ask questions. So please, it's a really interactive live stream, and we hope that you have also some questions for us. So, Caitlin, I would start, and then Fred has also some questions for you, I think, and that's in the conversation afterwards. So, my question would be, how do you see the general development in the crypto blockchain industry at this time with COVID-19? And what does this mean for banks in particular from your point of view?
Oh gosh, the virus has definitely gotten everybody focused on just the logistics of work. And one of the most interesting aspects of it is that we're natively digital as an industry. And so I think a lot of us haven't missed the beat. And that's what I've witnessed from colleagues and friends. Obviously, a lot more Zoom meetings than we used to do, and a lot less travel than we used to do. But I don't think as a whole the industry missed the beat. I saw this morning that the tech stocks are in a couple of cases hitting all-time highs, which when you consider that we're probably in a depression economically, that's kind of a strange concept, but then it's not such a contradiction when you realize that those companies are really just natively digital. And in fact, actually their revenues are probably going up, not the other way around.
Super. Thank you. So just if we that was like the general view. So what do you see the effects on banks, for example, with this or in this time? Do you see that there is an effect on banks, or did you say through digitalization? I can imagine while some banks have some challenges.
Well, this is going to be interesting for sure, because the traditional banking industry, of course, makes money by a spread on its funding cost relative to its net interest margin. And if you think about what's happening, especially in the US, but I would imagine all around the world, the punchline is there's probably some impaired balance sheets in the banking industry. That's the understatement of 2020. But I understand that many of the regulators are giving banks the ability to delay recognizing their loan losses because they want to ensure that the economy has credit continuing to flow. And so I think 2020 isn't necessarily the year of reckoning for banks' balance sheets. 2021 is more likely to be the year of reckoning, but it's coming. When you essentially take 15% of the workforce out of work, and despite the regulators or the stimulus packages, which may or may not enable them to continue to pay their mortgage and their credit card bills and their student loans, you just don't know what the loan losses are going to look like. And the reality is banks are so leveraged, traditional banks are so leveraged as a general rule that you're just going to see some shakeout. And I think a lot of consolidation in 2021 in the industry. That's outside of crypto. Crypto, of course, is such a small niche within the traditional banking industry right now.
Okay. I think from my point of view, the world actually started fracturing long before this pandemic actually struck, right? And what we actually observed now with COVID-19 is that the world kind of, got 5 years of digital adoption in 2 months. So we all discovered that not only were we, kind of secluded and had to operate in our own little, space, we were kind of confined in our own space, but you were not able to go to the branches. And many banks were trying to figure out how do we do that. And now old people and people who are not digital affine, suddenly, they figured out how to do e-banking. They figured out how to do a Zoom conference with their banker and ask their questions. And, we've seen a big adoption on the chat bot side as well. But Respect is putting a kind of divide in, that we suddenly are able to self-service ourselves, but also start asking the question, what does digital actually mean in banking? Because, before we thought we had a long period of time to go, and now we just see, oh, everything can be digital. And we just grew up 5 years of adoption, 2 months. I think that's amazing. And it's going to be very interesting to hear your view, Caitlin, in terms of, how is that going to move the timeline of your project?
Well, the timeline of our project, and I've started a bank called Avanti, formed it in January, hired the executive team in February. We're just knocking down milestones as we apply, but we're not a bank yet, to be clear. We are applying for our charter, and we're aiming to open in early 2021. These are very long, drawn out regulatory processes with every last detail taken care of in the application, all I's dotted, all T's crossed, etc., before we can open our doors. So realistically, it hasn't affected us, but one of the couple, well, I guess there are a couple of things that we've noticed. One is that there are a lot more engineers available. Our CTO, Brian, shared with me, it would take 3 to 4 months to find a terrific candidate because these skill sets are so specialized in this field, and we've been able to find them much more quickly than we anticipated and hire more quickly, which is going to help us enable ourselves to get that tech up and running and better tested by the time we get the doors open, just simply because we have had almost an embarrassment of riches in being able to hire a great team. And that is because there have been some layoffs in other places. And I think, from an investor interest as well, it hasn't slowed down. In fact, actually, one of the funny things is in the beginning, well, some of your audience knows about Wyoming. Wyoming has by far the most crypto-friendly laws in the United States. And it's set up a special bank charter, which is what Avanti is applying for. It's essentially a payment charter. It's a non-lending bank. So by law, it has to hold 100% of its customer deposits on reserve. It can't lend with fractional reserve lending the way traditional banks work. And so as a result of that, one of the questions that we kept getting is, how are you going to compete with a bank that can earn an interest margin and can underprice you on your products? And now with interest rates at zero for everybody, potentially even going negative like they've been in Switzerland for a decade, it's obviously, it's a level playing field now. Let's put it that way. And so the competitive disadvantage of a 100% reserve bank with a bulletproof balance sheet is less than a leveraged balance sheet when interest rates are higher. And then I would pose the next question, which is, if you had a choice of earning zero on your deposits and depositing money in a 100% reserve bank that's not leveraged versus depositing money in a leveraged bank, and you're going to earn the same interest rate, which one would you rather deposit your money in? So ironically, you've actually, it's turned into a bit of a competitive advantage for the 100% reserve banks. Yeah.
Well, I think it's an interesting question, right? Because if we saw Yubao from China, right, they actually became the world's largest money market fund by actually doing distribution over, a chat channel or chat application, basically, right? So the Chinese government even needed to go in and stop them, and they were not even having anything like, tier 1 ratios or any kind of a balance in the back of that, really, right? So that was a lot about convenience, consumer convenience, and the ability to say, okay, under Lehman or when they went basically bankrupt, or when you sign up to a fund, normally you need to there's redemptions and subscriptions. You only can get in after the month. And what they did really, really nice was that you can get in and out what is perceived very instantly. So are you going to also think about that kind of user experience and work on that, or are you mainly going to think about bulletproof balance sheet?
Well, the bulletproof balance sheet comes with the law. So every one of the banks in Wyoming has to, by law, have a non-leveraged balance sheet. There's plenty of operational risk, to be clear. So it's not like there's zero counterparty risk, but there's zero credit risk because of the different composition of the balance sheet for all of the Wyoming Speedy banks. But to answer your question, yes, of course, we're very, very focused on the customer onboarding process. It's an interesting dilemma because the banking industry is very, very heavily regulated, and there's a lot that has to be done that's just literally regulatory compliance. That it's not the institution's choice, but how the institution does that is definitely its choice, and how much money it invests in technology in the customer onboarding process to make it as painless as possible. And we are definitely spending a lot of time. There's a huge challenge in the traditional banking industry now that I'm pretty deep into how it works and the connectivity into the central banks. There's a huge challenge with the legacy tech debt. It's just not that easy to build new systems and fundamentally the architecture is really quite different when you're talking about a blockchain. It's a decentralized system, and it really doesn't fit very well with centralized architectures. And it's interesting. I took a trip, as you know, through enterprise blockchain for a while, thinking that we'd actually kind of go to the proverbial intranet before you hit internet, that same path where companies weren't willing to open up their tech stacks to the outside. And they had to kind of open it up to the inside first before they then took that final step. I don't think that's happening in financial services because the simple observation that I had from being on the inside of the enterprise side is just the architectures are so different. They're not plug and play. They're rip and replace. And as a result, the traditional financial industry has really struggled with these decentralized architectures because it's just to them an anathema to give up control of their data and to share infrastructure as opposed to duplicating and reconciling their own infrastructure and data.
So leads me a bit to the question, what does a blockchain bank mean for you? Because, you're kind of famous for saying, you're starting a blockchain bank, you're behind the Wyoming kind of laws or a big of the initiative, right? But what are you going to do around blockchain and DLT in your bank?
Well, to be clear, I've never used the phrase blockchain bank. That's a phrase that a lot of folks like to shorten it, or crypto bank. That's not what we are, actually. And we can talk about the Swiss regulatory structure because I would argue that the Swiss banks that are in blockchain really are blockchain or crypto banks. But in Wyoming and in the United States, they really are not. And here's why. Because we're not allowed to take deposits onto our balance sheet in crypto. We're still just plain old US dollars on the balance sheet of the bank. The reason why we are able to do something with crypto is through our trust powers. Banks can take assets onto their balance sheet, or they can service assets that they're not actually guaranteeing on their balance sheet. And that's what we are. It's the same model as a State Street or Bank of New York. They've got many, many multiples of assets under administration relative to the assets actually on the balance sheet on deposit at the bank. And that's I think directionally what we're going to look like as well. It's a big difference though between what's available in Switzerland, where FINMA has actually allowed banks to take crypto deposits on balance sheets. So I eventually I think the US will end up going that far, but the US is not there yet.
Caitlin and Fred, we have already the first question after 10 minutes of discussion, so really positive. The question is thoughts on Ripple's efforts to work with regulators to help cross-border payment space through the use of their service and XRP as a bridge asset. Have you already talked to Ripple, or are you interested in?
Is that for me or for Fred?
For both of you, but I would first ask you and then also Fred's opinion on that.
Yeah, sure. I've worked with Ripple actually dating back to 2014, so I know them pretty well. Or not as much in recent years, but while I was still at Morgan Stanley, actually, we took a pretty deep dive with a corporate client on this very question of how do we actually help the corporate clients save money on their cross-border payments. And Ripple is absolutely trying to solve the problem that a lot of folks are trying to solve, and coming at it from many different directions. And obviously, it was funny in the beginning. Nobody wanted to touch XRP. This was 2014, right? Think about Bitcoin was still a bad word, and there was no chance that any of the big banks were going to be banking crypto. But they were interested in the technology. The challenge with the technology minus the cryptocurrency, the XRP, is that it actually added a step in the settlement process. And that was ultimately one of the big reasons why at the time that was a challenge. Adding a step in the settlement process wasn't actually going to simplify things. And that was, again, getting back to what I was just talking about with the enterprise software. It really doesn't fit very well with existing processes. It's hard to bridge the two. They are really quite different. And so once the crypto became more acceptable, then you could start to actually say, all right, now we may actually be able to use this for cross-border payments to cut out steps from from the cash settlement process. And that starts to become very real. And then it's in the market competing with all of the other cryptocurrencies like Bitcoin and like Tether and the stable coins as well. But Fred, I'm interested in your views on that.
So in my view, trust is the only legal performance enhancing drug. So whenever there's more trust in a company, a country, or community, good things happen. And I think my issue a little bit with Ripple is that, as you said, first it added another step in the settlement process. Secondly, it's not a fully open blockchain. I don't feel I'm getting a lot more trust around the process. And when I work with the banks, they're very much, but why? We are just adding another complexity system and we won't be able to replace what we have. And I think that's why I think it's going to be very hard for Ripple to get a rebound now, also with these national currencies, thinking about digital and with the new SWIFT standards and so on. I think they've been really a part of pushing forward, but yeah, it doesn't give me the added value and it doesn't solve the real problem I'm sitting with in banking. So I'm not as positive on it, to be honest. But I'm really happy that the journey they've taken has been pushing the market very much forward.
Oh, most definitely. They were the first enterprise company that I met at Morgan Stanley. And had they come in to talk about Bitcoin, they wouldn't have gotten a meeting. But because they had come in to talk about something non-Bitcoin and applying the non-Bitcoin blockchain to real world problems, they got the meeting and then it took off. So you're right. They absolutely have played an important part of defining the problem and showing that there are alternative solutions. The challenge is, as you say, though, XRP hasn't gotten the network effects that the big cryptocurrencies have. That doesn't mean that it won't. So it's out there, and I'm a big believer in a free market for money, and they absolutely have a seat at the table. And I don't get involved in the internecine warfare in the crypto industry between the different protocols, because everyone has a right to exist and we all should be competing. And the best one will ultimately win. And I have a view on which is likely the best one, but my view doesn't matter. It's ultimately what matters in the marketplace. What do customers want? And what customers want is what's going to solve their problems, the cheapest and easiest. Yeah,
but I think there's also a flip side to that, right? So I remember in 2014, 2015, right, we were speaking a lot about interoperability, right? And I think this is one of the key points here. So I think, we were speaking about blockchain could actually go in and solve some of these silo problems, these silo data. But what we see now is that the blockchains actually is creating just mega silos, right? So I think, if we can go in and actually work more about the interoperability, so like Ripple, for instance, will be able to work much more smoothly with the national bank settlement systems, right? Or we speak about the different blockchain protocols are able to basically operate with each other. I think then we're going to see a much different, let's say, adoption than if they only focus on solving a very concrete problem, even though that would give you, it will bring you very much forward. But I think this interoperability is just lacking.
Yeah. Well, and the hardest part of interoperability, to your point, though, is the actual settlement with the traditional financial system. Because as you know, the IT architecture of central banks is very different. They're not designed to have interoperability with decentralized systems. And that's a challenge.
To the point before with Ripple, we have another question again about it. So Ripple is a software company. XRP is an open source digital asset. If a big company used Bitcoin, would you have the same opinion? I think it goes to you, Caitlin, but especially to Fred and afterwards. So I would suggest that Fred would answer it and that you can also give afterwards your opinion.
Yeah. So I guess so obviously we have an asset. Well, we could discuss if it's a real asset or if it's a cryptocurrency, and there are also different views on, from a regulatory perspective, in which country you are, what you actually, what XRP really is, huh? I think we are not really defined upon that yet, huh? Because it's not as decentralized as for instance Bitcoin is, right? I think this is one of the large regulatory risks some of the banks are seeing before they are willing to actually look at it as an asset, right? But from my point of view, I think Ripple is a very, very cool software company who's really made a big effort, and maybe they've not gotten the praise they need to, but I think they're still struggling with some of the fundamentals of getting into capital markets, and I think what's interesting to see now is what kind of technology stacks are the national banks going to choose, and how far is Ripple in that process compared to other players. And for XRP, we basically in PwC, we run a node, and we're able to audit that. So we're basically able to, so banks who are, let's say within our scope, at least in Switzerland, they're able to hold Ripple, and we can go in and audit that, as we can also audit Bitcoin, right? So I think from an asset perspective and a trust layer perspective, we have what it takes to do that. So I think that's okay.
Okay,
I love that.
Would you like to add something?
Yeah, but by the way, I love that the PwC is starting to audit crypto assets. So you're running your own nodes. You know what it takes to audit crypto assets. That's a huge, huge step forward, and I'm very hopeful that it will happen in the U.S. very soon. That we'll actually have audited financial statements. But for crypto, and it does, again, Fred, kudos to you for helping PwC come further along and being able to audit digital assets, because it's coming. No, there's no question about that. I don't really have anything to add on the point though on banking. I just it's jump ball, right? There's so many people working on this very same problem. And I think, kudos to Ripple for helping us understand what that problem was. In fact, actually, for some of the Ripple fans that are out there, you might have noticed that Seagate Technologies was one of the early investors in Ripple, and that came through an introduction that I made between Morgan Stanley and Ripple. So that dates back to 2014. It's eons ago already in crypto land. Yeah, but Seagate was trying to solve the problem. There's a blog post on my caitlin-long.com website with the then treasurer of Seagate talking about the big problems that Seagate had in dealing with just literally moving money around the world. They're a manufacturer that they had something like 700 bank accounts. And I know, for example, some of the bigger companies have in the thousands the number of bank accounts around the world. When you're that global a company, you've got to move money efficiently. And the problem is that cash gets trapped in those bank accounts because the banks don't want you ever to be overdrawn. So they require you to have something called a comfort deposit in the bank accounts. And all but the highest credit quality companies are effectively required to trap cash in their bank accounts to make sure their bank accounts never get overdrawn, because that would be an extension of credit. And the banks don't want to extend credit in that way because it's not very profitable. The banks would rather extend credit on, deal contingent foreign exchange or, some of those really high margin products where they can get a higher return on their capital. But what that does is it just forces a huge inefficiency in the economy, because companies like Seagate, back then they had just become investment grade again after having spent several years as a non-investment grade company. So they had a very high cost of capital, and requiring a company with a high cost of capital to trap cash in 700 bank accounts around the world is really a deadweight loss economically. It is a function of the banks not, frankly, having enough competition in offering a much better, enterprise risk ERM type efficient system that with higher returns. In other words, where I'm going is, banks have a lower cost of capital than probably 80% of the businesses in the world. And yet the banks are the ones who are forcing those high cost of capital companies to trap cash in their balance sheet. It should be the other way around. Those high cost of capital companies should be able to borrow the bank's low cost of capital effectively. And the way you do that is you actually speed up the settlement of payments. The problem is there are too many people making too much money off this existing system, and they're very powerful. The banks as an industry are very powerful, and the corporate users of those services are more dispersed and don't have as much power to force the change, which is a movement to a real-time gross settlement system. And that's what digital assets does.
And maybe just one slight point here, right? Because I think there's something which should not be forgotten, and that is if you are a multinational company, right? It's actually quite hard if you sit in the main treasury, in the mothership, and you are saying, do I actually trust the bookkeeping and the ERP system in my little daughter company in a little small country, right? And therefore, you're also kind of saying, okay, I do actually would prefer them to move the money around on bank accounts, because in the bank's balance sheets, you have a much better interoperability. It fits into your ERP systems. You can do your daily closing, etc. And I think one of the beautiful things Ripple actually did, the software company Ripple, is they actually went in and looked at that and said, would there be a way we can create a sufficient trust that the main CFO would trust all the sub-ledgers around the world, the multiple daughter companies, in a way he will do when he can see it on the bank accounts. I think that part is also very, a very important pain point.
Really,
which we also have identified in our audit business.
Really interesting point. Yeah, good, really good point. These businesses are so sprawling. I think I read somewhere GE has 20,000 bank accounts. Can you imagine what it takes to manage that, right? And if we end up in a digital asset world where they can effectively be their own bank, and the banks that they're doing business with are really just service providers, it's a totally different structure for corporate treasurers. A lot of people don't understand how powerful corporate treasurers are in capital markets, because you never see them on CNBC or any of the business press. They're just quietly doing their job, but they're the ones who are literally moving the vast majority of the money that moves in the world every day. It's coming from big company treasurers.
So to go to the next questions, because they're coming in.
Okay, all right, we'll go faster.
I like this conversation. Thank you very much up to now for all that their insights. So I would just take together two questions. One is from Scott Wagner. The other is from Istanbul Blockchain Women. So Scott is asking, what implications do you see with current and future central bank actions regarding monetary policy, Wall Street, Main Street, management on fiat versus crypto outlook? And the Istanbul Blockchain Women are asking, do you think, is it possible for central banks to take cryptocurrencies as a reserve currency in the future, Bitcoin, for example? So if you want, did I ask you again the first one? Just tell me, or could you? Oh,
no, thank you. Yeah, yes, absolutely. I think there already are central banks that are investing in crypto as reserve assets. Watch the Caribbean. The company Bit got started with a digital dollar. They were kind of the first stablecoin in many ways in Barbados. And there's a lot going on now with digital currency, a central bank digital currency in the Caribbean. So that's probably where you're going to see the experimentation, and it's for good reason. The Caribbean countries were cut out of the global banking system when de-risking really got going, and ironically, the central bank head in Barbados was the one who embraced creating a what was effectively a Bitcoin-based stablecoin in Barbados in 2016. So, this is before Tether came along. And the reason he did it is because the big banks were cutting out the local banks from the correspondent banking business, and they couldn't get access to US dollars. And so he made a really wonderful speech to the global regulators, begging them to be let back into the global banking system, and essentially saying, you forced me into using Bitcoin as a means by which I can get dollars back into my economy, because otherwise my legitimate businesses can't be banked. It was a wonderful story, and keep an eye on that. In terms of monetary policy, look, I mean, fiat currency is getting less scarce, and cryptocurrencies are getting more scarce. We just had a Bitcoin halving where the inflation rate was just cut in half. It is effective. It is essentially, from a stock to flow perspective, as scarce as gold. And in 4 years, it will be even more scarce than gold, which historically has been money a lot longer than anything else in human history, and across cultures and across time. And that's because it's scarce. Well, we now have a digital gold that's even more scarce called Bitcoin. There are others that, again, may challenge Bitcoin, but I happen to believe that Bitcoin's going to win just simply because of the network effects and the scarcity that it's been able to maintain. But Fred, I love your insights on those questions too.
Yeah, so I don't know where to start, right? But to keep it very short, I think we are seeing a huge polarization, right? So we see an increased localization of economies due to supply chain issues. We see a heightened nationalism as nation states look to blame each other, right? And the potential for humanity to come together after this crisis to solve important problems, should be higher than ever before. But that's not what we're seeing, right? So on the macro level, we are seeing that people are printing money like mad, right? We are seeing we might go into some kind of a big recession, right? And I think the only thing that keeps us together really is it's a common belief in the dollar, right? But it's not like we believe in the dollar in terms of what the dollar really represents. We believe in the dollar rails. We believe in how the dollar rails allows us to communicate in global trade. But I think if we would ever agree on a new reserve currency worldwide, it would most likely be a cryptocurrency, and it would most likely be a currency where there's a very high transparency and there is much more equality in terms of that not just one nation state can go in and change the rules of the game. Whether that will be a Bitcoin or whether it will be something else, I don't know, but I cannot imagine a world where we all come together and believe in the Chinese renminbi or the Russian ruble without us either having another major war, and I hope we will not get that, or aliens are coming to Earth or something like that. It has to be a very large external event to create that, but I've never seen the dollar under so much pressure on the rail side as we're seeing now, and I think we need creativity in a way we never needed creativity before. And I think the notion of us now giving helicopter money is showing a problem that many small companies cannot prove to the state or to the auditors or whoever is going to kind of help them. Why do I need those money? So we see there's a big trust gap on the ERP level. So the metadata on the small businesses is just not sufficient that the states feel good about giving them the help packages they need, and that creates a huge pressure on the state. So I think we're seeing now also this coming in and basically begging for more smart money, and that's why I think is also pulling towards these digital new currencies and national currencies. We need more metadata. We need more trust around what we can use money for. But on the flip side of that, monetary and fiscal policy is what's keeping the world alive right now. And I think if we remove that, completely, we're going to have a very interesting society.
To your comments, Fred, just Tom Short has here, I think, just the question I expected that will come. Any thoughts on China's digital yuan? That's also what you discussed with the dollar at the moment. So what is your opinion on that?
Well, it's quite interesting, right? Because China's GDP, even after COVID, is now growing much more than the other major economies around the world, right? So they might be hit earlier, but they're also coming out stronger, is what it looks like right now. So if China actually goes in and launches this new, we can argue how blockchain-based it really is, right? It's a very centralized digital version of a currency, right? But they could basically go out and force other countries to use that instead of using the US dollar to clear with them. And yes. Then you're seeing something very closely happening to what we saw with WeChat and other of those channels. If you have an entry barrier and the bait out there is so great that you want to be a part of that ecosystem, well, I don't think we have a lot of choice. The flip side of that is that the local economies are seeing right now that we need local supply chains. So we see a big move towards restoration and saying we want to produce locally, we want to be able to supply ourselves locally, and we want to have control of our data locally, right? So I think there's like a big divide happening right now. But I think Libra really did the job well here in pushing towards these, mega, currencies where you can basically hit 30 to 40% of the world population in one clearing system or one Excel sheet. So I think that's something we're going to see a lot more of. But actually, I'm betting more on Sweden, to be honest. I think the technology stack they have up in Sweden right now, and the way they're looking at it towards actually having a cashless society and some of the advantages they're seeing there, I think that looks really, really interesting as well, to be honest.
Caitlin, your view on that, on the yuan, the digital yuan?
I think it's interesting. It is also interesting because anyone in the world can get a wallet, and so it's not limited actually to just Chinese citizens. So it does potentially enable essentially the peg to start to break down, the capital controls rather that China is enforcing at an institutional level. They're going to start to sort of tear it down on a retail level. I haven't seen a lot of people talking about that the capital controls are essentially starting to be relaxed in the form of the CBDC, because it is available globally. Now, you can't get a local merchant in the United States or Switzerland to accept it now, but that doesn't mean that it won't be, right? Yeah, exactly. Yeah, we're in a really uncertain time. I do want to say, though, as much as the central bank monetary policy is viewed as something that's propping up the economy right now, one of the challenges is, though, that we don't know where interest rates would be if we had a true free market. I think they'd be a lot higher because I don't think you'd have negative interest rates in a true free society, because the value of something now is always greater than the value of having to wait and have it later. And so therefore there's a time preference implicit in the term structure of interest rates, which implies that you should discount something in the future to today. And so therefore interest rates would always be higher. The fact that we have negative interest rates just goes to show how screwed up things are, frankly. That we're not in a free market, because it wouldn't, that it's human nature, it always prefers to have things now given the choice. But all that said, we therefore don't know what the real cost of capital is. And so we know what the market says it is, and we know markets are very deep, but we don't know what the cost of capital would be if interest rates were not set by central banks. As a result, there's a lot of malinvestment, a lot of bad capital investment happening right now because interest rates are artificially low. And some would argue that the right thing to do is just halt that. We're better off as a society to stop destroying economic value and actually have a true free market again, and start to accumulate capital rather than the capital decumulation that we've been experiencing. That's a big part of this whole question about crypto and banking too, because it is actually on this fault line of, what should capital markets really look like? Do we really believe in free markets? Do we really believe that prices should be set at the willing intersection of buyers and sellers of anything? Or do we believe that they should be guided by centralized institutions such as central banks? It's a philosophical question.
So just to come back again, because you mentioned again the banking, or to our topic, one other question is the major DLTs cannot reflect loans, future dated transaction, fractional reserve accounting. Smart contracts are not the answer as they are off ledger. So how do you respond to this? And it's again, first you, Caitlin, then afterwards, I think also Fred has an opinion on that.
Well, this is what I was literally just talking about. It's a good segue. Right. That ultimately a true crypto system, truly decentralized, is a real-time gross settlement system where you really can't have fractional reserve banking on it. And a lot of folks would look at that and say, that's a positive. It's a big positive to why the crypto tokens have value. And so, yeah, it is the fault line right here. Do we want to be able to sort of play 3-card Monte where, a bank deposit is lent out to multiple people, and there's an American movie called It's a Wonderful Life. When everybody wants their money back at the same time, the banker has to explain, where is your money? It's in his house, it's in his car, it's in his, her student loans, and people realize how banking really works. That's not the way it works in a digital asset system, which is inherently an equity-based system, not a debt-based system. It gets back to this point we were making early on. It's another one of the reasons why the two systems are fundamentally so different, that we didn't see the existing system start to adopt crypto from within.
Fred?
I think the bonfire of technology will shine even brighter until markets become rational. And what I mean that is really about the zero interest rate, is the public valuations, the PE ratios, and so forth. But when that's being said, I think, maybe it gets a little bit academic, right? But we also need to kind of look at what is money really at the center, and what is the role of banks, because many banks are actually creating money in a good way, because they're also giving mortgages away, and they have two sides of the balance sheet, and they actually have a part of the national bank role in many instances, right? Because if we then go to where Caitlin is talking about, right, we could also then argue, why would you not take your house mortgage directly out of your national bank? And when we look at what China is doing, but also look at what the Bank of England was basically arguing in one of the first position papers, is if we actually have a full digital pound or sterling, right? Should it be possible for a normal person like me or a small company to have a bank account directly with the national bank? And if I have that, why would I even go to another banking balance sheet and then get some services? What kind of digital or what kind of services would lead me away from actually getting my services directly? And then you start carving out, a big chunk of the middle layer, and start actually also moving around with who's doing what in the value chain. And I think that's where I'm getting a bit scared when I saw some of these hyper loans, and I saw some of these people who's been playing around with programming interest rate on the blockchains, because it's a little bit harder than you think. It looks so easy on the outside, but when the human rationality, because we're not very rational, right? When it starts coming in there, it shows that it's not a rational game. A lot of this is really about emotions. It's about people exploiting systems. It's about how do we safeguard consumers as well. But I think Caitlin is onto something, that people should have a choice, and there should be possibilities for doing what you believe in and executing that. It should not be a power base where only the large bank sets the agenda. You should be able to get capital and get loans and distribute your debt through multiple channels. I truly believe that, and that will give us a more effective market, and a more effective market must be something everybody would be interested in, I would argue.
Yeah, there's one irony of the intersection of crypto and banking, which is an essay, one of the best essays I've read in a long time, by Nick Carter, talking about how stable coins are the cryptoization of the dollar, where essentially stable coins potentially could extend the life of the dollar as a reserve currency, because it gets us out of these legacy slow and expensive payment rails into much more digital and faster, cheaper and more transparent payment rails, but you're still using the dollar as the underlying. So the stable coin is just the transport vehicle for the dollar. And I think there's a lot to that as much as we like to use the dollar in global trade, we know there are a lot of problems with it, such as the Seagate problem I was talking about earlier. Every major company in the world who does business internationally has that same problem. It's really costly to move money. And naturally, there shouldn't be counterparty risk and latency in payments. We should be able to swap payments and goods at the exact same moment. So we don't have the latency and counterparty risk issues that the system imposes on us today. And so if we can use the dollar on crypto rails, that's a powerful concept. And I think Nick's onto a powerful concept there. And maybe that's how central banks end up interacting with crypto, is more and more through the stable coins.
Well, it certainly looks like many of the projects looks much more like stable coins or much more like representations of the local currency with some metadata and some other points to it, than actually rethinking about, how would money actually look like if we could design it with the, without legacy rails and with the opportunities we see right now. I totally agree on that. And I also agree with the white paper there that, Tether and other great companies are going to extend the life of our economic system quite long, actually.
Good. So we have like the 45 minutes, but I would offer to Fred that he can ask the last question to Caitlin. I think till now we had a really vivid, discussion. So Fred, one last question to Caitlin, and then afterwards, yeah, we had a super discussion about like banking. Is that as we said, or as we mentioned it also, we had a lot of discussion about a lot of things. So Fred, please, the last question.
I would like to divide it over in two, but it's really the same question, right? So how much are you going to implement DLC or blockchain technology to run your new bank? And the other one would be, how much are you going to allow crypto assets to be dealt with in your new bank?
Oh, the latter is very, very, very extensively. It's going to be the core of our business, is around crypto assets, providing fiat on and off ramp services, providing custody because you have to in order to have the crypto come into the bank. But it's really about the fiat on and off ramp and being able to settle both the payment and digital asset legs of a trade within the same legal entity. That doesn't exist in the United States right now. It does in Switzerland. But with the US dollar right now, you cannot settle your payment and the crypto leg of your trade simultaneously because they have to be done through two different legal entities, which means they have to be done in sequence. So this is new. This doesn't exist in the market right now. So it is heavily part of our strategy. We will be predominantly working in and around our trust business, which is where the digital assets are, more so than our payments business. We will be doing escrow products as well. So more, a digital version of an analog product that exists today. But we're going to be doing a lot that is new and different, that gets at what you were talking about, Fred, about the new ways of defining payments. We've seen an evolution of this, and we're not done yet. And so we will be offering all kinds of flavors of different ways to combine digital assets and traditional dollars. To answer your first question, what's from a systems perspective, are we using a blockchain or distributed ledger technology inside the bank? Yes, absolutely. But of course, for dollars, we cannot. So we have to actually have a hybrid of the two systems in our tech stack, and that's not easy to do. And there engineers who have actually done this before successfully, proven that they've done it securely, and done it inside regulated financial institutions, including Brian Bishop, our CTO.
Perfect. So thank you very much for this discussion here to both of you. Caitlin, thank you very much for calling in the morning. Fred, as always, a pleasure to have you on these discussions. So I'm really looking forward to January with our conference. And Caitlin, as we said, we keep in touch also for that. Yeah. So thank you very much to both of you. And enjoy your evening, Fred, and your morning and your day, Caitlin. Thank you very much also to all people that watch this live stream, and we will see us in June again. Thank you very much.